This is the Beyond the Dollar panel. Let me say a few words. Since World War II, the US dollar has obviously reigned supreme. It dominates both international transactions and official foreign reserves, not to mention corporate reserves too. And as we all know, the $100 bill is the global store of value of choice for everyone from narco-traffickers to dictators prepared for quick exit. However, as the United States' share of global output shrinks and its dominance over geopolitics is increasingly challenged, more than one analyst has predicted that the dollar's long reign is ending. This panel will examine that proposition and discuss the implications for both public policy and investment strategy. And if we have time, which we won't, we'll make a detour into talking about digital currencies. And I hope not too many of you showed up here to hear about the Bitcoin, because you ain't going to hear much about it, because we just don't have time. Let me introduce the panel. From my right, can you hear me, by the way?
Yeah.
Oh, good, good. My right is Yusuf Boutros-Ghali, who is the former Egyptian Minister of Finance and a former chairman of the International Monetary and Financial Committee, which is a key policy advisory group for the IMF. He holds a PhD in economics from MIT. And yes, I apologize for saying, yes, you're asking yourself, he is the nephew of the late Boutros-Ghali, the former Secretary General of the UN. Next is, get this right here, Joaquim Levy. He's been a managing director and chief financial officer of the entire World Bank Group for the past year. Previously, he served in a number of senior positions in the Brazilian government, ending up as the Minister of Finance in the last Rousseff administration. We won't hold that against you. He earned his PhD in economics from the University of Chicago, which helps to explain his reputation as a fiscal hawk. Is that fair?
Yeah.
Fair. Okay.
I try to keep it.
Try to keep it good.
Yeah.
Next is Barry Eichengreen, who holds a joint chair in economics and political science at the University of California, otherwise known as Berkeley. And he's sort of everybody's favorite academic economist on international finance. He's the go-to guy. He is the convener of the Bellagio Group, which does something important and very scary, maybe like the Trilateral Commission, but he's not going to tell us about it. You might say he literally wrote the book on the subject of today's panel, the book being Exorbitant Privilege, The Rise and Fall of the Dollar and the Future of the International Monetary System. To my near left is Nouriel Roubini. He's the CEO of his own consultancy firm, Roubini Macro Associates, as well as a professor of economics at NYU's Stern School of Business. You may remember him as Dr. Doom, the lonely voice in the wilderness who called the collapse of the housing bubble in 2008. It's not the only financial crisis he's been involved in. He served in the Clinton administration from 98 to 2000, when most Asian economies were slammed by capital flight and financial panic threatened to do similar damage across emerging markets. And last but hardly least is James McCormack. He's our private sector guy. He's the global head of sovereign and supranational ratings for Fitch, which is based in London. If you want to know whether Thailand or Nigeria or any old of 117 countries is likely to pay its debts, he's your man. Earlier in his career, he was a country risk analyst for Export Development Canada and an economist for the Department of Foreign Affairs in Ottawa. Now, I think we should move right in. As we all know, and you're here because dollars dominate foreign exchange reserves worldwide. But consider this. In 2013, when congressional Republicans threatened to default on US Treasuries, the resulting crisis seemed to lead to the strengthening of the dollar. Is there any foreseeable circumstance in which the dollar's position could decline? And if so, would it be rapid or gradually? Who would like to start off with that? Would you, please?
There's a short answer. No.
No.
No. The dollar, in addition to dominate trade denomination in major commodities in the world, is backed by an administration, and by administration I don't mean the actual one in there, but by infrastructure, administrative infrastructure, that controls most financial flows in the world through the intermediation process. To there is no one else to take over. You're talking about the euro. The euro has a structural flaw that, if not addressed, eventually will lead to the collapse of the currency.
I'm going to do euros right after this, so let me just move on and see what if anybody else has a viewpoint on this. Barry.
I'm among those who's been predicting that the dollar will lose its monopoly as the leading international currency, and I'll go on predicting that until I'm right. I actually subscribe to the Santa Monica view on this question. There was a well-known former bond king who described the dollar as the least dirty shirt in the pile, and I think that remains the case, that Mr. Boutros-Ghali is right, that there has to be an alternative before, even if people grow alarmed with US policy, they begin to move away from the greenback. But when we get there, I'm going to argue that you're underestimating the scope for alternatives.
Does anybody have a slightly different view on this? James.
I think there are things you could envisage which would expedite a change from the dollar to whether it's the euro or something else. But I'm not sure it's the things we usually think of in terms of the role, is the euro ready, is the RMB ready, things like that. I think if the institutional integrity of the Fed were called into question, then I think there would be a possibility of that change from the dollar to something else being expedited. I don't know exactly what it would be to call into question the institutional integrity of the Fed. We used to think that sort of QE, helicopter money, those kinds of things would possibly lead you down that road. Obviously, that hasn't happened, but maybe the initiatives sort of audit the Fed, a fiscal dominance kind of question. Those sorts of things I think could kind of linger in the background, which could undermine the dollar. But these are sort of tail risk type things. I think the consensus is it's a dollar until something better comes.
I'm glad you opened that, though. Please continue.
Yeah, I mean, my view would be, of course, in the short run, there is no clear alternative to the US dollar. It's not going to be euro. The euro could disappear. Couldn't be the RMB because China has its own problems. Some people think about SDR. There's been a pipe dream. Some people believe going to a global currency like the Bancor. That's an even bigger pipe dream. But I think the following point is geopolitical is important. Traditionally, there is one power as the major geopolitical power at our times. Is the theory of hegemonic stability. The Pax Britannica, when the Britain and UK empire was dominating the world, and the pound was the major reserve currency, and then we had the Pax Americana since World War II. And you had the global hegemon, the United States, who provided a series of global public goods. It was free trade, capital mobility, land of last resort, security and defense to Europe, to Japan, Korea, Middle East, you name it. And provided also the Bretton Woods institution. So you had a framework in which then the US became the major reserve currency. Let's assume for a moment, and we don't know whether Trump is going to be radical protectionist populist as opposed to more pragmatic, but there is a scenario in which US goes towards unilateralism, isolationism, and away from the multilateral system. And it says, I don't want to provide these global public goods for trade, for capital mobility, for security, and so on. And that in that world, then at some point, people are going to say, if the US is not providing that one, then somebody else can provide those global public goods, right? And the other key important point in that context, I would say, is the following one. In order to be a reserve currency, you have to be a safe asset. And how could be that the US dollar doesn't become a safe asset? One scenario is one in which you lose the independence of the Fed. The Trump administration in the next 12 months can choose 6 out of the 7 members of the board, new ones, and they might choose a bunch of actually doves that are under political control. They might choose even the new head of the New York Fed. Trump has talked now about a tax cut that's going to cost us trillions of dollars, going to increase the deficit. Eventually, that might lead to a fiscal unsustainability. And then the temptation is to monetize it and cause inflation. So if that scenario occurs, and then he said if then we have too much debt, we might even renegotiate it and default it, that's a situation in which the US dollar is not a safe asset. And the other dimension of it is also important because many strategic rivals of the United States holding dollar as a reserve assets. I mean, China, Russia, and others. But now the US has used politically its own power to actually impose sanctions against North Korea, against Iran, freezing those assets. If you're China and you think there's going to be a strategic rivalry between US and China over long term, having $3 trillion of reserves all in US dollars where it could be a conflict and then US can seize and freeze those assets is not a great idea. So the point is we're not anymore in a world in which there is a global hegemon. There'll be multiple powers coming to power. Some of these powers are revisionists like China, Russia, Iran, who are challenging the US system. Even our alliance with Europe is becoming more fragile as the US says NATO and so on are obsolete. In that world, many things geopolitically can change. Even the role of the dollar gradually and eventually could become very different. That's a scenario that can lead you eventually to the demise of the dollar, right? Gradual decrease of the role of the dollar.
I would like to follow up on James's point, though, about the Fed. We've always taken it for granted, or at least for a very long time, that the Fed is the bedrock and its independence is unquestioned. That wasn't always true. It's been questioned in the past. And it's interesting that there isn't much talk about that yet, even though President Trump has the ability to change it entirely. Anybody want to comment on that? Please.
Well, actually, I would, if you allow me to comment on the first question, where we see perhaps a more gradual things. It doesn't have to be a demise of the dollar, but certainly, as someone mentioned, you get to a more multipolar situation. And for instance, if you think about China, today it's just 1% of total reserves, while the US dollar is 2/3. But as you see perhaps changes in trade flows, and for instance, the Asian area becomes much more geared towards satisfying the domestic market of China, this will really set new process where you could see at least the renminbi going to be a regional currency. You have to fix banks issues and so on. But I think you can really move not at a catastrophic situation, but a situation where you would have more of a, say, multipolar currencies relatively important. It uses the currency.
Gotcha.
So
That's the sort of the positive scenario.
Yes, and we see a step toward that, and we see China working very consistently to get through that. Of course, zillions of question marks, but it is a very plausible path, which we see moving forward.
Let me do the
SDR is one case.
Let me do we're going to get to this. Let me do the doom scenarios first. I mean, if I might, Barry, you wanted to comment on that, right?
Yeah, I wanted to add one observation on the Fed, which is that everything the Trump administration is now about to do macroeconomically will drive up the dollar. That includes the change in the monetary fiscal policy mix in the direction of Reagan early 1980s mix. That includes corporate tax reform. It was not called a border adjustment tax this morning by Mr. Mnuchin. It was called a reciprocal trade tax or something like that, but that's splitting hairs. It will restrict, it will make imports more expensive, and in a fully employed economy, something will have to give. Demand will have to be shifted back toward foreign sources through a stronger dollar. More restrictive trade policy will move in the same direction. All of these things will frustrate the president's efforts to bring back good manufacturing jobs to the United States. And he will presumably be looking for the villain of the piece. And one possible villain will be a Federal Reserve, which is raising interest rates. The other villain, of course, could be foreign governments.
Anybody, let's do the Fed thing before we go any further. Is this a plausible scenario that we're about to witness an era in which the Fed's independence is seriously challenged?
We also heard this morning that the president's the listener, and there's been a lot of, say, evolution on some policy positions in some cases. So I think there's a question if when you have to replace and we await the consequences, if really the president will choose a more radical path than preserve the independence of the Fed. I think there will be plenty of advisors that you make very clear there is a value in keeping this independence. So I think you should not take for granted that this is the other scenario.
Look, I may be over-optimistic or over-positive about the American system, but they have enough checks and balances to keep Trump from doing anything crazy. I mean, look at what he has promised so far and what he ended up delivering. So the system itself is built so as to keep him from doing anything that's way out of the ordinary. My feeling is this, I may be mistaken. So ultimately, the Fed scenario of it being subsumed under the US Treasury or being canceled or whatever, I think is fairly remote.
My view of it is, as Barry was pointing out, the policy mix of the US with fiscal expansion and economy near full employment is going to lead to inflation, is going to force even relatively dovish Fed like Janet Yellen Fed to hike sooner, faster, and more. And it's clear that that's going to strengthen the value of the US dollar. And it's clear that the Trump administration doesn't want a strong dollar because the white, blue-collar manufacturing worker voted for him want to have jobs. And a stronger dollar is going to imply a worse trade deficit and even more destruction of manufacturing. So the administration is facing a dilemma. They want a weaker dollar, but their policy mix is going to lead to a stronger dollar. Now, what could they do? They could go to ECB and BOJ saying, change your policy, and the BOJ ECB is going to tell them, take a hike. They could go and impose capital controls on inflows, but that's very radical. It's going to push interest rates on, say, US Treasuries higher if you impose a restriction on purchases. You could do unilateral effects intervention, but the ECB is going to start the intervening the next day, and then a trade war becomes a currency war, becomes an intervention war. Or final option, if all else fails, is trying to have a Fed that is actually even more dovish than the current Fed is under political control. And I think that might be the direction we're going. Now, the rhetoric of the Republican in Congress is we want hard money, we want hawkish Feds. You know, the Republican Congress are divided between the gold bugs who want the gold standards, hard money, those who want a Fed who has a single mandate rather than a dual mandate, those who want to impose a tight audit of the Fed, and those who essentially want to restrict the Fed choices by having a rule like a Taylor rule and so on. That's the Shelby-Ryan view of Congress and Republicans. But Trump is a real estate guy. He said, I like low interest rates, even if he criticized the Fed, before the election because it was creating a fake economy and helping Obama. But the reality, he wants low interest rates, he wants a lower dollar, as he has said, and he wants a Fed that's under his own control. So he's going to choose a bunch of people that are very dovish, even more dovish than Janet Yellen. And these people with fiscal stimulus might decide to be behind the curve and then let the currency devalue because they want easy money and they want to fiscalize or monetize a fiscal deficit. And you end up in this situation with lots of debt that is monetized by the Fed and inflation and a weaker currency. In that situation, people are going to have a second look at the dollar and say, do we want to have all these dollar assets? That's a risk scenario they cannot rule out.
Barry, I think you have a view here.
The way Richard Nixon prevented the Arthur Burns Fed from raising interest rates was fake news by planting stories about Burns wanting a salary increase in the Washington Post, and it worked. Draw your own conclusion.
Wow. Now you started this, James, so if you want to finish it on the Fed, by all means.
Yeah, I think something to watch. I don't worry so much about the value of the dollar going up. Dollar goes up, dollar goes down. The dollar is still the reserve currency. It doesn't seem to have much impact. But I think watch this audit the Fed legislation, which has had a couple of runs at Congress already. It is going to come back to have a kind of third try at it. In some senses, central banks have nobody to blame but themselves for such initiatives because the central banks aren't really all that transparent in terms of balance sheet. If you try to compare the Fed, the Bank of Japan, the ECB, Bank of England, Bank of Canada, Swiss National Bank, you end up with very different looking balance sheets on their websites or their annual reports. They use different accounting systems. They're quite hard to interpret. So there is some value in having central banks be more transparent and be clearer about what's on their balance sheet. And there's it's a little bit ambiguous, and you can sort of understand where politicians are coming from. But having said all that, it could be the thin end of the wedge for the other types of things we've been talking about in terms of fiscalization or monetization, of fiscal deficits and things like that. So you could be going, down a path that nobody really wants to go down, but I would say kind of watch that because it's really an institutional question about the Fed, not necessarily the value of the dollar question.
This points a direction. If people begin to doubt the dollar for whatever reason, why can't we? And why have we never seen the euro or the yen serve as a global as a global reserve currency? Why have they seem to meet the basic criteria, or at least for periods of time they have met the basic criteria for being reserve currencies. Why have they utterly failed at that job? Or maybe they didn't. Maybe their masters didn't want that job. Anybody want to talk about this at all?
Why would anybody want his own currency as a reserve currency? I mean, if I were China, I would resist violently having my currency a reserve currency in the world, because that implicates my banking system. It forces me to eliminate all capital controls. It forces me to not intervene, to sort of fiddle around with the exchange rate. It puts so much stricture on the system that, given their authoritarian infrastructure of government, would sort of unravel their control system of the economy. So I don't think it's an advantage
Does
to have your...
does that logic apply to the euro?
The Europe has a structural flaw. You need a single fiscal entity to match the single monetary entity. They don't have that. And until they set it up, the euro is going to be a fairly iffy affair, sort of not quite stable, and always subject to another Greece popping up, Italy popping up, Portugal popping up, or something, putting the issue back into question on the table.
So, are we all? Oh, go ahead, please, Nouriel.
I mean, there are lots of reasons why not the euro, not the Japanese yen, not the pound, and not the RMB have become an alternative to the dollar. I mean, we live in a system, first of all, there are multiple reserve currencies, but by many standards, the dollar is still the dominant. I mean, there are reserve currencies used by central banks that are including the euro and so on. Hard to replace it because there is vast network externalities and economies of scale of using everybody the same currency as a unit of account, as a means of payment, as a store of value, and you name it. There is a huge amount, therefore, of inertia if everybody's using it. It's like the Facebook effect. Is very difficult. And then you need the shock that leads to the major, usually traditionally the major geoeconomic, geopolitical, and economic power of the world becomes also the one that provides the reserve currency. When you had the Pax Britannica, was the British pound. The Pax Americana is the US dollar. Some people say the next century is going to be the Chinese century. We don't know yet. China might become the major global economic power, but if they want to have their currency as a reserve currency, as we know, they have to have a flexible exchange rates, they have to have elimination of capital control being reintroduced, they have to have a deep liquid market for their own currency, domestic and foreign, they have to liberalize financial system, make it safer, and so on and so on. And right now they're going the other direction. But I would say the Chinese, in my view, while there have been setbacks right now in position of capital control, restricting, the currency movements, but their objective is gradually to make sure that their currency becomes a reserve currency. For example, they are starting to use now the RMB in bilateral trade with the BRICS, in bilateral trade with Africa. They've just convinced the Emirates, when they do oil trade, to settle it in RMB. They're discussing with Saudi Arabia and so on. I mean, China is becoming a major global economic power. I was in Davos when President Xi defended globalization and free trade and so on. The US is retreating for it, and step by step, China is going to go to a bunch of countries and say, why should we use the US dollar in trade between us? It's true transaction. Let's start using our own currencies, and my currency is going to become gradually more convertible, and so on and so on. And step by step, the Chinese currency is becoming now a unit of account, is becoming a means of payment, is becoming slowly a reserve currency. And as they liberalize more, it's going to become more convertible. So they have a plan, their vision, but it's a multi-decade long of making it the reserve currency. And there are benefits of it. The benefit is, first of all, international seigniorage. The benefit is that it keeps your interest rates lower than otherwise if there is a demand for your reserve assets, so your financing of your budget deficits. If you have a current account deficit, it's going to be larger. You have geopolitical power. There are many benefits. Of course, today, China doesn't want it because it leads to volatility of the currency and capital movements that they cannot afford. If they can stabilize their economy and avoid a hard landing, the plan of becoming internationalized RMB is going to become again a plan we're going to try to implement over time. And therefore, the RMB is going to become a more important reserve currency. I'm not saying it's going to dominate the dollar, depends on how much we mess up things in the United States, but the trend might be the one that the RMB may be really, over time, as China's become the leading economy in the world, maybe an alternative to the US dollar.
But Nouriel, this flies in the face of their political system. If they do what you're saying, they should do to have this as a reserve currency. It flies right in the face of their political system. They will have to empower their people. They will have to make their financial system more transparent. They will have to introduce a more interactive democracy, a more interactive.
I'm not
I
sure
don't
about
think they want
democracy.
that.
If they have a stable economy, stable financial system, a very great economic power, people are not going to care that it's not democratic as long as their own economic and social system functions. I don't think the democracy is a condition for becoming, a reserve currency.
I agree.
Being an empire, it is. We had the UK empire, we had the American empire, and China is building its own global empire over time.
So I disagree strongly. Every international and reserve currency in history has been the currency of a political democracy or a republic. The sample is not large, but take the dollar, the pound sterling, the Dutch guilder, the currencies of Genoa and Venice. Those are the international currencies in history that spring readily to mind, and it's not a coincidence. Investors want to see political checks and balances. It doesn't exactly have to be Western-style democracy, but they want to see checks on the arbitrary exercise of power by the executive before they're prepared to park a significant share of their assets in Shanghai. So I think people are overestimating the prospects for the renminbi. Everybody keeps saying slowly, slowly, and I agree with that part. As applied to the renminbi, I also think that people are vastly underestimating the prospects for the euro. So it is true that Europe is embarked on an unprecedented experiment of monetary union without fiscal union or political union. But it has learned from its crisis, and now it has monetary union with a normal central bank, which it didn't have before 2011. It has monetary union with banking union, which I think is the critical link. And it is going to expand the executive powers and the powers and the EU budget in response to the refugee crisis, the border crisis, all the other, the need to project foreign policy influence. And finally, we are being reminded that Europe has a set of political institutions that are more robust to populist accidents than our political system in the United States. Some countries have proportional representation with a threshold. Can you say Geert Wilders? Some countries have a 2-round presidential election where people coalesce around the mainstream candidate. If this is being taped, you can view it after Sunday. But I think there are reasons to be optimistic about a European economy that is growing faster than the US economy, about countries like Spain that have done a lot of structural adjustment, I think. And now capital markets union and the fact that the European financial system is going to migrate from London to the euro area, all of which is euro positive.
So let's clarify this, or let me put it in other terms. In a period in which there was reason to believe the dollar may be unstable, that is, an attack on the Fed, a level of chaos in American politics we haven't experienced before, and if central banks or corporations that had big cash balances were going to try to diversify, they would diversify into euros. Is that not correct? That's the only place to go. Is that fair? So that in some ways one could resurrect the euro there are scenarios in which the euro could be resurrected as a reserve currency.
Well, the euro hasn't gone away, right? Its share of international reserves goes up or down as a function of exchange rate and valuation changes, but it's holding pretty steady in the 20-25% range.
It's already there. Yeah, I mean, somewhere around 20% of foreign exchange reserves. If you just count up the number of countries that either use the euro or have their currency anchored to the euro somehow, it's more than the dollar. If you just look at the IMF, the annual exchange rate report that they produce. So I'm not sure I agree with the way you put the question initially. These other, the yen, the euro, and other currencies are kind of failures as reserve currencies. They are genuine reserve currencies, as are a number of other ones. smaller ones that central banks do invest. If you just want to define it very narrowly in terms of where central banks put their foreign exchange reserves, they don't all just buy U.S. treasuries. They buy a number of other things. They buy Swedish assets, they buy Swiss assets, Canadian assets, Australian assets. So it is much broader than just in nominal terms. Obviously, the dollar is going to be much bigger. But if you look at as a share of either the outstanding obligations in those smaller currencies, these are not insignificant. And central banks in those countries do spend some time thinking and looking at those numbers because it affects their capital markets.
Nouriel, you're about to ask?
Yeah, I recognize many of the things that Barry has said about the euro and potentially being a successful monetary union and the euro becoming a major reserve currency. As we know, there is still plenty of fragility within the eurozone. The French election went well, but next year election in Italy, and you could have an anti-euro party coming to power, in Italy. Greece is still a sore problem, Portugal and so on. And when you look actually at the euro as a reserve currency, you're not having a Eurobond, a European-wide government bonds that is supranational. Yeah. What you do when you're using euro as a reserve currency, you have to buy either Italian bonds or German or French. And the reality is that the reserve managers are not buying Greek bonds, are not buying Spanish bonds, are not buying Italian bonds, are buying mostly bonds, right? So that's what they're doing. So the German market is not there, but we're using the euro as a reserve currency, given there is a risk that some of the periphery currencies are going to become either exit the eurozone redenomination risk or the spread widen, and then you have a massive losses on holding them and so on. They're buying essentially reserves of the center of the core, and the core is mostly Germany because Netherlands and Finland in terms of assets are spare change. So that's what the euro is as a reserve currency, is essentially bonds. Let's admit it. Let's be clear about it. Not much else, right?
I want to go back to a provocative thing that Yusuf said. Why in the world would the Chinese wish to? It was you who
yes.
said that. Why in the world would they want to have a reserve currency? What's the? And you touched on that just a little bit, but I think it's a rather important point. Barry, I think you've written about this in some degree, and it's not quite what people think.
It has it's heavily symbolism. A first-class country needs a first-class currency in the same way it needs an aircraft carrier. So there are, it does have considerable symbolic value, I think, to Chinese officials. But they view it in the longer term, I think, as advantageous for the development of their external sector. It'll benefit their banks to be able to do business in their local currency. It will benefit their exporters to be able to provide export finance to foreign counterparties and customers in their own currency. I think it is part and parcel with internationalization of the Chinese economy. But again, the byword here is slowly. They got out ahead of themselves in the last couple of years, and that's why they had to resort to capital controls, which have understandably and I think appropriately slowed down the process.
Joaquim,
Yeah, I think that's exactly it. And I talk for a moment from my little corner at the World Bank, and you see, of course, for instance, the whole efforts of China in supporting investment infrastructure throughout Eurasia, going to Europe. This has an impact and obviously creates new flows. Although, for instance, the AIIB, the investment banks, actually works in dollars, doesn't work in renminbi. But the new development bank, the BRIC banks, is much more inclined and operating in renminbi. So I think, like Barry said, there is a strategy, a long-term strategy. It's really being built within the administration, PBOC and so on, very carefully. They're taking the right step. For instance, the introduction of the renminbi in the SDR, even if you might say that's not totally complete as a currency to be, but creates a new status for them. So I think it's something, not necessarily dominance. I still think that probably we may have a multipolar system. And you take 10 years, well, maybe, probably much more than that. You see the euro, it's now 20 years of discussions. But I think it's in this direction, and you'll not be good, you'll not be bad for most economies, and you bring benefits for the Chinese economy that will be worth some of the costs that were mentioned here.
Yusuf.
Just following up on Professor Eichengreen's point, I attended discussions with Chinese officials when I was at the IMF, when they were trying to get the renminbi included in the SDR. And by discussing with them, I said, well, are you now on the way to sort of letting your currency float and stop interventions? He said, no. We just want our currency to be respected. We will do just enough to get into the SDR and have the respect of the international community. But all this bit about floating and liberalism, it's not going to happen.
Let me turn that around just for a second, and we'll go on because we don't have a lot of time. One could interpret what's happening in China as a struggle between internationalizers who want to use the prestige of the renminbi to force against interest groups within China to force them to modernize the economy. So that you could see this as a power struggle, or at least a policy struggle within China, and the whole idea of claiming the importance of having a reserve currency like an aircraft carrier is serving the interest of domestic reformers. Any thoughts about this?
Yeah, I would say the authorities are perfectly aware of this and what it takes to do some of the things that were mentioned. So yes, it's seen as a tool to address all the risks in SOEs and the banking system. Now, of course, there are realities, so it's not easy to do it, but they understand the force, I mean, the power that it
so it's a
has
little
in the
carrot you can
strategy.
add to the reformers.
Yeah, there is a strategy.
But history is littered with the corpses of countries that used external liberalization to try to force domestic policy reform. We know from myriad experiences that this is highly dangerous and can backfire. And I think fortunately there are considerable numbers of people in China who appreciate this as well.
Yeah, I do agree that actually the reformers were using internationalization of the RMB as a carrot for doing reforms. And actually they lost that battle because the vanguard of it was the PBOC. They screwed up in 2015. They moved to flexible exchanges. They screwed up the liberalization of the capital account, massive outflows, and now they've imposed essentially controls on outflows, on inflows, the currency is being managed, and all the rest. But leaving aside that one, I think that the strategy of President Xi Jinping is one in which actually having the RMB as a major reserve currency is part of the long-term strategy. And they've literally started one by one with lots of countries to say, let's start using the RMB as a means of payment. Why should we be using the dollar when we're doing trade? They've done it with Russia bilaterally. They've done this dialogue with the BRICS. They've done it with the African countries where they have a major trading relationships. They're doing it with the Emirates. They're doing it now. We're starting to talk about it with Saudi Arabia and so on. Once you have your currency becoming a means of payment, the next step is also to say, why should we use the dollar as a unit of account? Let's use our own currencies as a way of settling also these things, so the volatility of the dollar doesn't matter. And while there are restrictions to capital account and the RMB is not convertible, there are plenty of reserves managers who say, well, having some of my reserves now with RMB, as I'm doing more trade with China, I'm doing it using the RMB, is a good idea. And step by step, even if there are capital control, they're going in that direction. And and the only strategy, by the way, the US had towards Asia with the rise of China, with the pivot, was TPP. And the first thing that Trump comes to power, he decides I'm not going to have TPP at that time where China is doing AIB, the BRICS Bank, the Silk Road, One Belt, One Road, the free trade arrangements of the Asian and so on. So the US has given up on Asia, and not just on Asia, on Latin America. Soon enough, even Mexico will join the Chinese and so on, if the US doesn't want NAFTA. And that gives a massive opportunity not only to China to have trade relationship, financial relationship, FDI, building their infrastructure, and slowly you're going to start using the RMB. And the Chinese, have this decade-long view of things, right? The famous story of, Mao being asked about the French Revolution, he said, too early to tell, right? And the Chinese have a long-term view about what's going to be their role in the world 20 years, 30 years, 50 years from now. And shouldn't underestimate the many problems that, as part of that strategy, making the RMB international currency is going to be part of that strategy, whether you like it or not. They may not succeed in the short run. It's going to be gradual, but they do everything gradually.
Do we, actually, the question we rarely ask is, do we care? Do we care if we have multiple reserve currencies out there? Is there something bad about it other than the fact that it would reflect the fact of the weakening of the U.S. economy?
I think there are both good and bad things about it. If the United States continues to account for a shrinking fraction of the world economy, which is the logic of emerging markets emerging, of course, it cannot provide the liquidity that 21st century globalization needs all by itself. There will have to be other sources, and having a diversified portfolio of liquidity sources in case one proves unreliable owing to executive decisions or whatever is prudent and desirable under such circumstances. The downside is that it can also translate into more exchange rate volatility. If there are multiple liquid markets and convertible currencies, people can switch between them. I like to think the first benefit is more important, and the second potential cost will be a valuable source of discipline on governments.
We've had a period of multiple reserve currencies, right? With the dollar and the pound were both reserve currencies?
We had two. We had one before 1913 when international reserves, foreign exchange reserves as well as gold, were important to central banks, and the important reserve currencies, sterling, the French franc, the German mark, were stable against one another because policies were stable and countries were reasonably peaceful for 30 or 40 years. And then we had another episode in the 1920s and 30s when both the dollar and sterling were important reserve currencies that didn't turn out quite as well.
Joaquim, you had something to say?
No.
Oh, okay.
No, it's silent. I agree with this.
Okay, well, I am thinking that we should save a little time for questions. Because we only have a little time. We got a microphone, and we got. Don't try without the microphone, because otherwise the video won't catch you. Sure.
It's coming.
Start us off, please.
Hi. Hello.
Tell us who you are, too.
My name is Ethan Penner, and I have a question. You guys have been focusing on the issue of the dollar remaining the global currency, but what you haven't talked about at all is the possibility of the kind of degradation of the global, what I'll call soft currency system, right? I mean, we have kind of runaway government debts that one who's a hawk might attribute to the fact we have soft currency in the world today, and it's true in every country pretty much. So how do you think about the risks of currency itself, all currencies, being degraded or devalued or under threat?
So we're talking about a period of high volatility, is that it? Go ahead.
Well, I remember in 2010, there are those who were saying that as we're moving to unconventional monetary policy and QE and negative interest rates, central bank were debasing fiat currencies, then you'll have runaway inflation, then you're going to have long-term interest rates going to the roof, then the stock market will crash, then the dollar is going to be collapsing, and eventually all these fiat currency debased by central banks will be replaced by cryptocurrency like the Bitcoin. Look at the reality. Inflation is lower and lower. We cannot even achieve 2%. Long-term interest rates are going lower. The gold prices actually fell 50% after going up. The dollar is strengthened rather than weakened. And cryptocurrencies, last year, Bitcoin was the worst performing currency in the world, lost 2/3 of its value, if you can call it a currency. So I think that people got it wrong because they didn't realize we live in a world in which there is excess supply, there is not enough aggregate demand, growth is weak, and central bank can barely achieve 2% inflation, and we had no choice by using this unconventional monetary policy to avoid that deflation, depression, and worse stuff. And actually it worked. It worked in the US, it worked in Japan, it worked in the Eurozone, and we're lucky that actually people relied on this unconventional multi-policy. The alternative would be much worse.
You know, I would like to get Joaquim to add to this, because I identified him as a hawk before, and let's see if it comes out in his response. What do you think about this argument?
I think, of course, in the medium term, we have a demographic issue that we have to work. There are, I mean, in this conference, we're talking about all the impact of new technology, what it will imply in terms of jobs and so on. I think these are the real drivers, much more than say that the central bank should not have taken the positions. And there, perhaps, we don't see the political system responding at the speed that might be necessary to ensure its stability. We in our recent, say, semi-annual meeting, one of the main things that we discussed was inequality, and not only inequality across countries, but also within countries. So these will become more and more of a driver with political implications, and ultimately the trust in currencies will come by these issues being addressed adequately.
There's another question here. Actually, lots of questions, so pick one.
Hey there, Rockwell Shaw. How do you see U.S. government debt playing out over the next half century? You know, do we just continue to have rising and rising debts and leverage our military to not pay people back, or how does that play out?
Anybody want to take a try at this?
Yeah, well, we try to forecast that as part of looking at the U.S. sovereign rating, and we don't think we can do it any better than the CBO does. And if you look at their long-term projections, you just see a steady increase in government debt. Consolidated general government, which is the definition that we look at, it's around 101% of GDP right now, and continues to go up through the medium term. Is there a limit to that? When Japan lost its AAA rating back in 1998, it was 120. Now it's at 240, 250. So the U.S. has some way to go, I guess, in terms of reaching whatever the limit is on government debt to GDP. So I think in almost every sort of realistic fiscal scenario you look at in the U.S., the debt to GDP, either federal government debt or a broader definition of debt, continues to rise for the foreseeable future.
Without necessarily without serious consequences.
Yeah, broadly speaking, I think so. I mean, it depends what you mean by serious consequences. If it means losing its AAA rating, I don't think that's really something we give a lot of. It's not the debt to GDP ratio that we worry most about in the U.S. It's other things.
More questions?
Can I follow up to that?
Only if you have a microphone.
Just a follow-up to this.
All right, quickie, and then we'll go back there. Okay.
Why do we look at
You need the microphone, and you need to tell me who you are.
Ian Epstein from Autonomy Capital. Why do we consider sovereign debt in the gross definition and not netted for central bank holdings? Said differently, what's the difference between a zero interest rate perpetual piece of debt that exists and cash? So why do I care about how much debt there is if it's held by the central bank? If the Fed bought it all and the dollar didn't puke, does it matter?
Well, think about what might happen in Japan, right? You're correcting a government balance sheet problem by creating a central bank balance sheet problem, right? What are the consequences? The professor will probably have a better answer to this than I would. What are the consequences of having a central bank balance sheet that has liabilities, the money they created to purchase the assets, and no asset? Doesn't that undermine the value of currency? Doesn't that undermine? It hasn't, but we haven't seen them draw a line through it yet at the Bank of Japan, right? They have the asset, which is the JGBs. They have the liability, the money they printed to buy it. On the day that they draw a line through that asset, what would be the rational kind of market response to that? Would you hold yen?
I think the yen would rally. I think JGBs would sell off and the yen would rally. I think it's all kabuki, and people are going to just.
Okay.
We've got a lot more questions here. Should we continue to another question?
Thank you.
And everybody, please wait. Don't talk without a microphone. It's frustrating because we're videoing all this.
Hi. Hi. Gabriel from UCLA. I'd like to ask about alternative multilateral currencies, perhaps stemming from the BRICS Bank or other means. I would like to know if that plays any role, and whether military power is actually a determinant for maintaining perpetual American debt, public debt?
Historically, there is obviously an association between ability to project military power and the confidence of international investors and others in your national currency and domestic asset markets. So yes, I think that association is clearly there.
Joaquim, before we, essentially this question was also, there were two questions here. One of them was really about the notion of multilateral currencies. And the SDR is the multilateral currency that's existed for a very long time, right? The special drawing rights from the IMF. It's not, its function though has always been very limited, right?
Yes, I think it's perhaps exactly because it's artificial, has not grown, and we see even some of our borders, some of our activities are in SDR, but there is demand of it being a single currency because it's so much easier to manage. So, I think some of the other factors that really back a currency are not found in the SDR.
Okay, more questions? No more questions? Okay, I overestimated this thing. I guess we're done unless anybody else on the board panel wants to say anything. Okay, well, thank you all.
Thank you.